Hello, today is Sunday, December 16th, 2018. We're taking a look at the S&P 500. We are heading into December week 3. That is monthly OPEX. It works a little bit differently than the usual Friday expirations. There's two sets of options there. There's an article in the blog completely explaining how week 3 expiration works if you're not familiar with that, if you're new to trading S&P 500 options and don't know about how that works, or if you sort of know how it works, but you've kind of forgotten the details of it, that blog article will explain it. We also have the Fed this week on Wednesday with a press conference afterwards. There is a blog article explaining the significance of that as well. And finally, on Friday, we have index rebalancing. So I would anticipate that we're going to see some volatility. No matter what we end up doing this week, I would say that 9 out of 10 times we're going to end up selling off on Friday at the end of the day as we rebalance the indices. Unless there's some weird thing where we just sell off like a bloodbath all week and then we wind up bouncing at the end of the day on Friday to rebalance that way. I've never seen that before. But in any rate, I would just say that if we do, get a bounce and rally this week, be protective on Friday at the end of the day. You don't want to see all your profits go away. If you keep buying a dip and buying a dip on this Friday, if we're on our way down, just be careful because there's almost always like a liquidation move at the end of the day on monthly OPEX. On quarterly OPEX when we have the rebalancing for the indices. All right, back to the S&P 500. Here's the 5-minute chart. Here was Friday's trade. Here is the big gap down that we had on Friday. Started it, overnight in ES, and we weren't even able to really pack on any points really. As we headed into the open, we have the CPI data that came out as well. I think, was that on Friday? No, there wasn't. That was on Thursday. Never mind about that comment. But in any case, we gapped down. What was significant, though, is that we rallied back up here and we tried to gain some support at the closing low, 26.32. And you can see here, tried very hard, tried closing some 5-minute candles above it. We got like one close above it, and that was it. Not a second one to follow through. And so things rolled over from there. Rolled over down to this 26.21 where lows had been coming back and holding a couple of times. On Monday of this week, we had flushed down to 25.83 and rallied all the way back to close, back above 26.32, which was the closing low set all the way back over Thanksgiving on Black Friday. So even with a flush all the way down to 25.83 on Monday, we rallied all the way back to 26.32. That's crazy. It's like a 50-point rally from the low of day back to close above this level. So clearly there was an effort being made here. And I believe that effort is quite clear that it was the effort of shorting 26.25 and 26.30 options puts against long puts that were, out of the money down here at 2600 and below. And on Friday, that whole effort was complete, and we just saw them get their home run. They being players, or the people that are in charge of pushing the S&P 500 around for the sake of their options. They just wanted to get their home run on their puts at that were maybe down at 26.10 and lower. So we went ahead and we broke down. We broke down through this 26.21. We tried to build a flat at 26.03. This is the original swing low of this sell-off. This was set in October, and then we finally broke that this week, trading down to 25.83. So I had a note here that if we break 26.03, we would test, 25.83. Well, we sort of did. We traded down to 25.93, so we kind of back tested it by 10 points, but that's really not a back test. That's just sort of just a break of 26.03. And then we got ourselves a new closing low, and that was 25.99.95 was Friday's close. So that is our closing low now for the sell-off. Okay, so 26.32 is out of here now, but it will probably still be in there as a level. This might even become a good edge level that we can use like all the edge levels that we discovered and have been able to trade around that were left for us from October. Maybe this one here is going to give us one that we can add to the list of edges at 2632. I want to point out that the closing low for all of 2018 is 2581. So I would think that if we're going to gap down and work our way lower tomorrow, what we're going to be focused on is whether we can close above 2581. I would say this one at 2599, that's such a weird thing. What that's going to require is that we're going to always be closing back above 2600. So I would think that we're going to get another closing low tomorrow, and either it's going to be a fresh closing low for the whole year, or it's going to obey this 2581 here that was set back in February. Okay, so speaking of where we might go if we head lower tomorrow, here is the gap map. This is the simplified version of the roadmap, but with a focus on just the gaps that are unfilled and cleared away so that we can focus on what's going on with the simple moving averages. And as you can see, and as I kind of warned about was going to happen, we got a sell signal that came through on Friday with its. We started on Thursday with the 10-day coming to meet the 20-day with both of the average lines falling, and then of course that pulled through on the open Friday. And in terms of someone who might be a purist who really works on the off of these simple moving averages, that sends out information to the algos to sell, and we certainly did sell off on Friday. So whether it was because of this sell signal or not is a lot of people will debate that, but I can tell you that this is a great tool that you can use. Judging these simple moving average lines has to do more with what direction that they're falling in and how they cross back and forth with each other, and that sort of is how you use them to their maximum potential, not just when we come up to them and pass or fail. But as you can clearly see, all of the rallies have been failing at the 10 and the 20-day simple moving average. So they have worked very, very well to help us judge success or failure of a rally. And as you can see, everything that has happened since re-breaking these, we had a small regain of them, but then once we re-broke them, they've become resistance. So any kind of rally from here on forward is going to have to take these out and close above them. Otherwise, it's just going to be another sell program that pushes us back lower again. But we have the bottom of this falling wedge pattern coming in at 25.55 tomorrow. And I've pointed to this falling wedge a few times. Not that I'm a real serious, believer of patterns like this. I just know that they exist and other people are probably watching them. And this is a really good juicy one because it uses this 2872 high that we made in January, and the line crosses down here through the low that we made in October at 2603, and then here we are, and this comes in, if we were to hit it on Monday, we would be hitting at 25.55. And what is the significance of that 25.55 level? Well, when we look at this part of the gap map here, where we see the February low and we see the April low. The February low, the low for all of 2018 is 25.32, and then on the very first trading day of the second quarter, we hit 25.53, and so far that's been the closest back test that we've gotten of this February low. All right, so if we were to put in that low at 25.55 tomorrow, that would be a very nice, neat, and tidy way to end 2018 with 25.32, 25.53, 25.55, and take off. If this 25.53 is meaningless and we are just to back test this 25.32, then maybe we'll trade down there, back test this, and take off from there. But here's the thing, though. There's also door number 3, where we just plow right down through 25.32 altogether. Because here was 25.32. Look why it was bought. It was bought because it was a poke through the 200-day simple moving average. I guarantee you that's the only reason why that held. You had a group of pension funds and large funds, large traders that were waiting for this event to happen, and they were there to buy with both hands at the 200-day simple moving average, hence this huge rally that took us up from there. We've never come anywhere close to backtesting that low since then. That 25.53, that's 21 point. That's a 21 point holdback from testing this 25.32 low. The day before this low was put in, we made our closing low for the whole year, which still stands at 25.81. I was talking about that more towards the beginning of the video. So that's kind of interesting. So maybe we need to test closer to 25.32, and then all eyes will be on whether we can keep our closing low of 25.81. I think that if we trade down and we do not make a higher closing low, if we trade down below 25.81 and do not recover that by the end of the day, I think that that is going to be a signal that this 25.32 is not going to hold. And that the real reason that this is not going to hold is because this probably never should have been bought. There was a lot of gaps left open for us from 2017 that should have been cleaned up and taken care of when we had the chance, when we were only coming down off of a high in January at 28.72 and only traded down to this 25.32 and only bought it because it held a simple moving average, but yet it left this ginormous gap open here at 24.61, not to mention dozens of gaps that were left in the wake of the first year of the Trump presidency. All through 2017, we have all of these gaps. And with the amount of trouble that seems to be mounting from a criminal standpoint of this administration, it really kind of makes sense that now would be the time, that if they want to go after filling these gaps, now would be the time to do that. Okay, so I'm just putting that out there as the possibility, and that the day that we do not make a close above 25.81 is probably going to be the signal that this work is going to be taken care of to the downside. So we might hold all of this week and rally, but then come 2019, the day that we open, trade down, and do not recover and close back above this 25.81, I think that'll give you a signal. And especially if we ever close below 25.32, that would probably be confirmation of that signal that we're going to go ahead and fill all these gaps. And I don't want to be a doomsday sayer here, but when I roll back through this chart so that you can see all of these gaps go all the way back here. Here's one at December of 2016. 21.91. There's one that the final one goes all the way back here to November 4th of 2016 at 20.85. The lowest point we've ever traded since the election was 21.25. So that's some scary stuff, That's really some scary stuff. That would mean, Apple may be trading all the way back to $100. That would be Amazon trading all the way back to $1,000. Go through your charts and see where they were all trading around November of 2016. And that's where all of your individual names will trade back to. So if you're putting together a list for a long-term buy, check where they were trading when the S&P was at 25.32 in February, and then check as well where they were trading in November of 2016. Okay, and somewhere in that area is probably going to be where they trade back to again if the S&P 500 is going to do that as well. Okay, but anyway, that's the doomsday play for now. Let's just focus and see if this wedge works for us and holding in this nice little neat row of levels to end 2018, to rally back, maybe rally back all the way to 28.50 or something like that. And then let's all buy our puts and see what happens in the first quarter of 2019 and see where we go from there. Okay, hope this all made sense and I didn't take you back and forth too many times and confuse you. If I did, you can direct message me anytime. As long as it's not the first or the last hour of the trading day, I always try to be quick to respond to questions. So please do not hesitate to ask them. And please read the blog. Read the blog articles. They will explain a lot of stuff to you about simple moving averages, about the halfway back, about the scene of the crime, all of these things that I mention in tweets all the time. Okay. Have a great rest of your Sunday. We'll see you tonight when futures open.